All right, so what we're looking at today, this is today's price action of today, right? So we see that we ended the day bullish, but we started basically retracing back down. So if we start zooming in, let's get to some price action, and I can show you on basically where I call my trade at, right? And how you can actually learn from my mistakes, right? So first thing we got here, right? We have market open. Let's go to market open right here. So this zone right here is 930, right? This is 930. So the market open bearish. Now, the first P theory that I'll be looking at, right, usually is the first percentage fair value gap, right? Which is the first percentage fair value gap that happens after 930, right? So if this is a 930 candle, you want to look for the first percentage fair value gap that gets formed, and it gets formed right here. Right? So draw that zone out and let's get right to it. So we see here, it was a lot of consolidation. Market open and it just started consolidating, right? So all the way from 9:33 to about 10 o'clock. So basically the opening range, because we all know the opening range is from 9:30 to 10 o'clock. The first 30 minutes is the opening range, right? So we got 930, we got the first percent fair value gap created. Now we have a whole bunch of what? This is just consolidation. Basically, consolidation is basically where it's not really creating no highs or no lows, right? It's just going up, coming down, going up, coming down, right? So look, market open, come up, come down, come up, come down, come up, come down. When you see that the market is doing this, which is consolidating, you do not want to trade. There are no trades in this zone. From here to here, right? There's no trades. Because why? It's consolidating. Now, we finally got some activity at the macro. If you don't know what the macro is basically from 950 to 1010. So if we draw that out, so I can put everything into context for you. So 950 starts way over here, right? So the macro starts from here all the way to 1010. Wow. So in this zone, from here to here, we got some bearish movement, right? So the bearish movement we get is basically, it's consolidating, right? It manipulates up and then it displaces lower. Look what happened. It creates a order block. We all know the order block is a down close candle, right? An aggressive move below with a fair value back, right? Coupled with a fair value gap right here. So let's draw that out. We have the most sensitive part of the order block, which is here. And you see, let's zoom in some more. As you see, the most sensitive part of the order block is literally from the low wick to the open of this bullish candle. And as we see here, price, if you use the fib retracements, price couldn't even get to the mean threshold of this order block. As we see here, if you use the fib, drop from the high to the low, the 50% range is the yellow line. As we see here, it couldn't even get to mean threshold of the fib. Displaced lower, right? Drop underneath, right? Coupled with the first percentage fair value gap, right? Displaced lower, creating our fair value gap. And remember, a fair value gap is when it's a 3 candlestick pattern to where the first wick and the third wick do not touch. So they draw that. So remember, it's from this wick to that wick. You want to extend it. And as we see here, we have the order block, displacement lower, right? This would have been a good trade if you were short, right? But look what happened. Look where price came to. It literally bounced at our new week opening gap, right? Remember, we want to see when price action gets to the new week opening gaps, right? You want to see it gets traded through to and then through or bounce at it and then displace higher, right? So this is one area where you're expecting it to reject from, right? And if you look lower, this is a 5-minute bullish fair value gap. So as we see here, it displaced through the new week opening gap, bounced at the 5-minute fair value gap. Look where it stopped at. It literally stopped right at equilibrium of the fair value gap. Remember, equilibrium is basically the 50% range of the gap, of the fair value gap, right? Or whichever zone that you're looking at, right? So we see here, look at the bodies. The bodies is trading in the upper half of the fair value gap. The wicks are in the lower half, showing that it's signs that this is an area where we're expecting it to bounce from, and this is exactly what it's doing. It's bouncing. Look what happened when it tapped it, bounced, displaced higher, came back again, bounced exactly at equilibrium, and then displaced higher, creating a order block right here. So draw this out. Most sensitive part of the order block is right here. So now let's put it back into context so you guys can see that. So we have consolidation. So 9:30 happens. Consolidation, 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 consolidation. Right? The macro happens at 9:50 to 10:10. Around 10:06, that's when it get kind of volatile. It creates the order block, coupled with underneath the first and fair value gap, displaced lower, right? Created a fair value gap into the area where we was expecting it to reject from, to bounce at, bounced at it. So bounced at it. So first look at it. We have a 15-minute sweep low. We have a 15-minute low sweep. And this is the NASDAQ. This is the NASDAQ. What you guys looking at is the NASDAQ. So we have a 15-minute sweep on a higher time frame. Now we have our lower time frame sweep, right? Lower time frame sweep in an area where we're expecting it to bounce from. Bounce, it creates right here the order block. Price close above, opens here. It comes just a little bit into the most sensitive part of the order block right here. Look where it happened. Boom, came away, left a breakaway. Remember, any zone, any fair value gap that gets left behind is unmitigated, which means it's just a breakaway gap. It's an unmitigated area, right? Displaced up higher, left a whole nother imbalance, came up. Then this is when it got tricky. It bounced in the air, so it gave us the 15-minute low sweep, gave us the smaller time frame sweep, coupled with the order block. Now, what we have here, we have something that's called a breaker. Let's delete the zone. A breaker is when, let me draw it out for you guys right quick. So let's look at this breaker. We have a low, high, lower low, higher high. Right? Let's draw it out one more time. So we have a low, high, lower low, higher high. Look at it. So you want to look closely. Look at it right here. It closed, but it didn't close. It stopped, and look at the bodies. All of the bodies is literally trading in the upper half once it displaced higher. Right? This is when I call my trade. Back up to this zone, to the 8:30 news. I went long, live in the Discord right here. Targeting 50 points. My stop loss is right above. It gave us some trouble. So watch how we manage the trade. So we get in. Look what happens after we get in. Gave us exactly what we're looking for. Another order block. Let me make it a little small so you guys can see it on the screen. So we all know. So we have the breaker coupled with the order block right here. We have 3 down close candles, a close above. Look at that. Touched it right on the money. Look at that. Close higher, created some new highs, swept all of these internal highs right here. swept all these internal highs, stopped right here because this is the buy side we were looking for, which is the 8:30 news, which is the wick. Ran up, came back down, started bouncing at an area where I'm expecting it to bounce at, which is this order block right here. And if you look closely, it's a fair value gap right up right here. Now look at this fair value gap. So now I can delete this zone and I can just focus on this zone. I'm not worrying about none of this. As long as we stay right here in this zone right here, because this is the, if it breaks this one, this is the area where I'm expecting it to bounce from, right here. But look what happened. It stayed bullish the whole time. Stayed bullish the whole time. Look, high, came up. So remember, this is the order block. This is the most sensitive part of the order block. The high wick to the open. All of this zone is the most sensitive part of the order block. This is the fair value gap. Look at the fair value gap. Look at the bodies of the candle. Look at the bodies. All of the bodies is closing in the upper zone of this fair value gap. None of the bodies are closing underneath. The wicks do the damage. The bodies tell the story. Okay? So eventually, high, came up, bounced at it, bounced again, and it kept bouncing. This is where people lose their stop. This is where people actually lose their trades because they don't know where to put your stop at. You don't know where to put your stop. That's why you have to understand order flow and understanding how to read price action, because if you really know how to read price action, you're gonna know where to put your stop, and you're gonna put your stop at places where you're expecting it to bounce at. Right? This is all ICT concepts. This is all ICT concepts, right? We just reading order flow, no indicators, straight price action, came up, took TP. And as you see here, the moment it took TP, look what happened after that. Let's just chart these down right quick. The moment it took TP, look what happened. Came back down, we have an order block. Closed below, came up, did it take the mean threshold of this order block? Look at the wick. The wicks closed, the wicks went above, but the bodies tell the story. Look what happened. This is the most sensitive part of the order block. From here to here, mean threshold is the 50% range, right? Mean threshold is the 50% range. It came up, there's no bodies above 50% range. No bodies, right? Came back down, and then just started trending lower. Trending all the way lower. And look what happened. Look where it just happened to bounce at. Like, look where it just so happened to bounce at. I'm trying to tell you, these ICT concepts are immaculate. Okay? So look what happened off the bounce. So now it bounced at an area where we're expecting it to bounce at. Created an order block. As we see here, remember the most sensitive part of the order block is from the high to the open. Mean threshold would be this place higher, create a fair value gap here, ran all the way back up. Back up to where? Look where it so happened to run back to. Look at this. We have, remember, order blocks, we have a sweep of liquidity, displacement lower. Remember, if you want to go higher, it's going to give us reasons to go higher. It swept and came right down, showing it may be time of a reversal. Sweep, so we have the order block here. Remember, two bullish candles, aggressive close below. Did it take mean threshold of this order block? No, displace lower. Did it take the rejection block? No, displace lower. Creates another order block right here, which is the proportion block right here. Left a fair value gap right here. Let's draw this fair value gap all the way through. Look at this. Smacks it on the money. Smacks it on the money. Look what happened. Creates another order block. Look what happened. Creates another order block. Look at that. Displacement lower, rally, came back up. Remember, look at the bodies. Came back up to the most sensitive part of the order block, which is here to here. Look at it. The wicks touch mean threshold. Look what happened after that. Displacement lower, coupled with another order block. Look what happened after that. Left the fair value gap right here. Ran all the way back down here. Ran back to where? Look where it so happened to run back to. Back to this fair value gap. Hey, I'm trying to tell you, bruh. Bounce here. Look what happened. Bounced here. Bounced here. Didn't even have the willingness to come back down. Came back up. Displaced up. Took the highs again. Look at that. Look at that. Marvin. Hold on. Let me clean up these zones right quick so y'all can see a little more better. We just drew out all the zones. Let's just leave all the fair values right quick. So look. Let's leave all the fair value guys right quick. Look at that. Look at that. Look at that. From here, bounce, rally, bounce, TP, come back low, create an order block, displace lower, bounce. It so happens that bounce at this first presented fair value gap. Shout out to ICT. Come back, bounce at this fair value gap that it just created. Remember, the market does four things: generate liquidity, hunch the liquidity, rebalance to an inefficiency, and rebalance to equilibrium. Bounce here, stops here, come back, displace lower, come back, drop, smack TP right here. And then after that, what happens after that? Look what happens after that. Comes back, another order block, displacement lower. It so happens to bounce here again, come here, drop lower. Now this is where price action is at right now. Right now it's 3 o'clock. So, man, we caught some amazing trades this week. We literally only have one losing day this week. We trade live in the Discord every day from 9:30 to 12. Right? We trade the NASDAQ NES. My Instagram is Casino Trades. My YouTube is Casino Trades. Please comment. I need you guys to comment and write questions and ask questions, because that's how I actually could grow the channel. Right? If you guys don't comment, if you guys don't like, I won't be able to grow the channel. And if you guys like and comment, that shows me that I'm doing a better job. Or if I'm doing something wrong, comment. Yo, I think you need to explain this a little bit better, or maybe can you slow down when you say something about this, or explain this a little bit more, stuff like that, right? So remember, I use ICT concepts, right? Which is it's basically a whole bunch of, honestly, just basically a whole bunch of order blocks, breaker blocks, bearish order blocks, bearish breaker blocks, consequent encroachment, equilibrium, mean threshold, propulsion block, sweeps. Right? We got sweep. Then we got the 8:30 open, which is a PD array. We got the 10 a.m. open, which is another PD array. We got Asia lows. We got bearish order blocks, bullish order blocks, buy side liquidity, consequent encroachment. We got highs, daily highs, double highs, relative highs, equilibrium, high sweep, internal buy side, internal sell side. Right? We have to know all these things. Right? We have relative highs, and that's about it. That's basically all my plays. Like I said, all of my plays basically come from either breakers or order blocks or inverse of all those things, and inverse fair values and stuff like that. You know, coupled with a whole bunch of razzle dazzle. So hold on, let me answer some questions right quick. Somebody has some questions. And y'all, so this is my market analysis right here. So I made $200 on a day, right? If I pop up in the Discord right quick, I have a Discord that y'all could join. It's a free Discord, right? It's a free Discord that y'all could join. right? Where we trade live every day. All you gotta do is comment. All you gotta do is comment what you're looking for, you know, and we can get you in there. Like I said, we're beginner friendly, right? We're extremely beginner friendly, right? So this is the chat today. This is the chat from today. So you see right now I'm up right here. I'm up $294 today. This is the chat today. We actually been smashing we've been smashing all week. So I was up 197 and I took a last trade. My last trade, now I'm up 300 on the day on my prop firm account. So I got 3 different accounts. I trade on my prop firm, I trade on I paper trade also, and I trade live. Right? So we be in here every day. As you see, we got about 100, we got 148, we got 248 members in the free Discord. Right. Education, we live trade every day. Stuff like that. If anybody got any questions, y'all just round down right now because I'm about to get off soon. I'm gonna answer any questions that y'all got right now. So he said, "What's up, bro? What's up? What's up? What you trading?" I trade the Nasdaq. I trade the Nasdaq. He said pair Nasdaq. Back for more knowledge, gaps for real. What's your strategy? So my strategy, like I said, I already told you, order block, break blocks. Well, that's my entries. My strategy basically a higher time frame sweep of liquidity into a lower time frame sweep of liquidity into an area where I'm expecting it to bounce from or reject that, coupled with the order block. If I'm late on the entry, I catch the breaker type shit back to either buy side or sell side or to inefficiency. And I don't be too greedy. I be in and out type shit. That's basically the strategy. So yeah, so catch up. And like I said, if y'all need any help, comment. Like I said, I'm gonna have majority of all of my long-term videos going to be on YouTube, because I know people on YouTube, they want long-term, they want long content videos. On Instagram, y'all just want to see the money make. Like on Instagram, y'all just want to see me make the money. Y'all don't want to see me talking and stuff on Instagram. So that's why on Instagram, I'm gonna just be posting the money videos like I usually do, little stuff like that. And on YouTube, I'm gonna have all of my long-term form on YouTube. This right now is gonna be on YouTube right now. So I'm about to post this on YouTube right now. You can watch the full recap. And that's it, man. I catch y'all boys on a rebound. Let's get it. Let me close this shot right quick. Stop recording.